Every trading guru wants to sell you a new secret strategy. But the truth is, there is only one framework that rules them all. And in this video, we're going to dive in deeper into the core trading framework. It's the true meta of trading concepts. Every other trading concept fits inside of this one main meta trading concept, which is the market structure. If you can understand this one simple trading framework, everything will start making sense in trading. And I promise you that by the end of this video, you will have a complete understanding of how the market moves, and you will have the complete trading framework that you can apply to your trading right away. And see, the reality of trading is that most traders live in confusion. System hopping from ICT to Wyckoff, SMC, there is so much out there, and every system is promising the riches, every system promising the best outcome. This is the best thing, this is the holy grail. And traders end up with 20 different setups, 50 indicators, but zero clarity. So truly, it all becomes gambling disguised as education. Gurus selling signals while students blow up. And even if you are able to ignore all of that noise, you end up alone, repeating the same mistakes. The real trading is the quite opposite of this. Real trading is all about following one simple framework with clear rules, as well as having risk boundaries that protect you from your own self, that protect you in those moments where you are going to go on tilt, where you want to over leverage. It's ultimately structure over chaos. And this is precisely why I created a Stoic trader community, a tribe that keeps you accountable, where we focus not on the holy grail trading strategy, we focus on the small, steady progress compounding into true freedom. And as a Stoic trader, I don't want to keep the trading system behind the paywall because that's not what really makes you profitable trader. Execution and discipline makes you profitable trader. So this is why in this video, I'm going to give you the full trading framework from start to finish, from beginner to advanced, the meta trading framework that you can apply to your trading right away. And if you want to master the execution around this trading framework, I invite you to join the Stoic Traders community at stoicedge.com. But I got to warn you, I am not your regular trading guru. I don't sell signals, I don't sell dreams, but I provide the structure, accountability, and execution environment that turns confusion into clarity. The framework I'm going to give you for free in this video, but accountability, execution, and tribe is earned through the consistently following your own rules. That's what Stoic Traders is all about. So if you are tired of chaos and ready to trade with discipline, first of all, subscribe to this YouTube channel, follow me on X at StoicTA, and if you are ready to put structure around your trading, join Stoic Traders community today. So with that being said, let's dive into the core trading framework. And this framework consists of three main areas that every trader should be improving and focusing on every single day. We have number one, market structure. And what I mean about market structure is price action reading. It's the chart reading skill that you need in order to spot the best setups possible. Those A++ setups that everybody likes to talk about, but when you ask them, they completely don't understand what the actual setup means. And this video will answer that question once and for all. What is that one trading setup? That's the number two for the core trading framework, the one setup. I simplified it to the sweep, trigger, entry. And we're going to dive deeper later in this video how to spot that one setup. And the number three is execution, which is consistently following your own rules and tracking your performance, making sure that you are refining and improving with each trade you take. As long as you can follow on all of these three main areas: market structure, D1 setup, and execution, you will find consistency in trading. I can promise you, I can guarantee you, because I've seen it happen times and times again. When people slow down, have patience, and focus on their trading framework, on these three main areas, they succeed not only in trading, but in life as well, because this teaches you how anything in life works. So let's talk a little bit about market structure, which is the true meta of trading concepts. Everything fits inside the market structure. So every other concept that you know, that you might learn, be it ICT, Wyckoff, whatever that might be, fitting inside of that one true trading core framework, which is the market structure. Because doesn't matter what trading methodology you use, it always comes back down to market structure, because the price is moving from the highs to the lows, from the lows to the highs, creating trends, reversals, and everything else that you might be learning about trading. Everything will fit inside of this one true trading concept: market structure. Once you understand how to read price, once you understand the rules of market structure, you will be able to execute your setups, your A++ setups in the right locations. And I don't care what methodology you want to use, what entry model you want to use, but if you can execute your one core setup aligning with the market structure, you will find better results in trading. And the main idea that I'm trying to get across is alignment with market structure. Everything is about alignment. If you can align the market structure with the highest probability location for your setup, I can promise you that your trading will get less confusing and you will finally find that clarity and simplicity within your trading approach. So this video will touch on the market structure and the one setup, but for the execution, if you wanted accountability, if you want to focus on the real progress and improvement in your trading, join Stoic Traders community at stoicedge.com. But without any further ado, what is market structure? Simply put, market structure is higher highs and higher lows. That's all it is. Higher highs and higher lows. Breaking the highs, creating higher lows. And here I have marked out protected lows and protected highs. So what is protected low and protected high? So essentially, protected lows is the higher lows in the trend, and protected highs is the lower highs in the trend. When price is making higher highs and breaking structure to the upside, this is what we call a break of structure. You have a higher high, and then when price makes a higher low, and this higher low delivers a new break of structure, meaning this higher low delivers a new higher high, this higher low becomes a protected low. So when the price retracing down, it should not break this protected low. That's the simple logic of market structure trends, making higher highs and higher lows. When the protected low is broken, this is what traders call it change of character or market structure shift. It's still a break of structure to the downside. So this break of the protected low will signal a change in trend. So now we are expecting a lower high to form and price start to create lower lows, breaking the structure to the downside. Within this whole framework of market structure. Of course, it's not going to look as easy as my drawing. We'll get into the details and real examples later in this video, but every other trading concept that you can imagine will fit inside of this main market structure framework, making higher highs and higher lows. And with the protected lows and protected highs, this is how we can track the market structure and what market structure we are currently in. Because the reality of market structure and price movement is that we have structure within structure. This is where traders start talking about higher time frame versus lower time frame. But the truth is that market structure is the same on all time frames. What traders truly referring to is higher time frame equals big swing and lower time frame equals smaller swings within the big swing. So that's how we can drill down from the higher time frame structure, like on the monthly chart, weekly chart, daily chart. That structure might look the same. We might see the same swing on the higher time frame. So in this illustration, as I have outlined over here, we have higher time frame swing point. This is the swing point. We have move down, price goes up, breaks the structure. So we have big structure, big swing point, and inside of this bigger swing point, we have little swing points that are forming structure and trends within a bigger swing point. So if you've been trading for a while, you understand that price does not move within the straight line. So this is why we have smaller swings inside of the bigger swing, and price moves from the higher time frame objective, from the big swing objective to the big swing objective. So from higher time frame objective to higher time frame objective. So when we looking at the price and talking about the probability of what price might do next, all we trying to figure out where price is going and where is that higher time frame objective. So when we have this retracement over here and protected low down here, we understand that the price within the bullish swing point. And because of this bullish swing point, when we see a break of structure on the lower time frame, what is the most logical thing, the highest probability thing that price will do next? Well, if this is a higher time frame bullish swing point, the most logical thing for the price to do after the retracement is to trend higher, creating lower time frame swing points, creating these smaller swing points within the bigger swing point in order to reach the next high time frame objective. And because of this bullish swing point, the next logical objective for the price is to make a higher high. When we do make a higher high, like in this scenario, what is the most logical thing for the price to do after breaking the structure to the downside? Well, it's to test this support down here. There is a demand zone that's created down here because we are in the bullish structural swing point. It's all about external structure and internal structure. So this is the external structure, and inside of that external structure, we have internal structure forming lower time frame trends within the higher time frame. So the main point is not to focus on the time frame itself and focus on the structure. What is the structure doing right now? And we want to align ourselves and our trading setups with the structure. And we can achieve that through the process of top down analysis. that we will do in a bit. But first of all, let's dive even deeper into the price action and how price actually moves. And there is a sequence that I call swing breakout sequence. You can watch my older videos on this YouTube channel and you will understand more about the SBS. But to quickly recap, we have a breakout structure. Price creates consolidation here, creates that first tap into the range. So after the breakout structure, there's people that going to be buying this breakout. So of course, there is not a secret that market is manipulated by smart money, by the traders with bigger pockets, and we all just playing within the big pond with sharks. So what we want to do is we want to study the manipulation and how it unfolds so we can align ourselves not only with the overall market structure, but we also align ourselves with the real players with big money that can actually push market around and move in our favor. So the swing breakout sequence, we need a breakout. We need first people that bought. Price creates some kind of consolidation, creates even the higher high to entice new buyers. When there is enough consolidation, price goes back down to liquidate these first people because they're going to put their stop losses right below this number two. So number four in the sequence is liquidation of this number two. Now, this is not enough for the reversal because we still want to follow the market structure. So these internal swings after the break of structure over here, we're following the internal swings now until price reaches move origin. So what is move origin? Simply put, it's a point of interest. It's the origin of the move, where the trend started. And to simplify it, it's the last move down before price started to go higher. And it's the last move up before price started to go lower. That's all it is. And it's the best point of interest that you can have on any chart, any trend, any swing point. Don't try to guess if this is the bounce or this structure is the bounce, this zone, or maybe we sweep this number two and then go back up higher. Stop guessing and start respecting the rules of market structure. I created the swing breakout sequence for the purpose of patience. And if you can follow the sequence, you will be more patient with your trades. So instead of jumping in on these random pullbacks over here or over here or over here, we wait for the price to get into the move origin. So how do we know that the price is done reversing? Well, that's why there is a number five in the SBS sequence. And the number five is simply a reversal. Sometimes they look like double bottom or double top, but mainly after the liquidation of number two, we want to see the price go down into the move origin. And after tapping into the move origin, price needs to break structure, retrace to that move origin inside of this internal structure swing point and have the same kind of sequence, the same SBS sequence, but internally, tapping into the internal move origin and pushing higher. This is the one setup that most traders trying to trade without even realizing. Most methodology is going to talk about the same thing, and I simplify it to just sweep, trigger, entry. So the sweep, we have the sweep to the left. This is also a start of the SBS sequence. We have the one, we have the two. This was the breakout over here. So there is the sweep of these first people. We also have a sweep of this last low. It's also considered the sweep because price did not continue lower, but it continued higher. So we have the sweep, which is the number one condition. Number two, break of structure, which is the trigger. We're not just jumping in on the random pullbacks that look like a sweep, that look like a turtle soup, and then now we are aiming for the highs. That's the recipe for disaster. Don't just jump in randomly into the setups. You need to have patience, and that's your edge, because most people cannot have the patience to wait for this move origin. And that's how the price gets manipulated around the market structure, where we have all of this internal structure. Price can do whatever it wants. It can sweep down, sweep up, and then eventually taps into the move origin and goes back higher. That's what all market does 24/7, every single day. It's manipulation around the market structure POIs. Even when the price is moving up higher, traders will see this as a break of structure and continuation lower, because they don't understand that the higher time frame structure, the bigger swing, is in control. So when we have the reversal here at the bottom, if our analysis are correct, if we are truly aligned with the structure, this is a trap. This over here is retracement to go down lower, will entice traders to short, only for it to reverse and go to the higher time frame objective, which is to make a higher high. This is why traders get confused. This is why traders say that market structure doesn't work, that break of structure always fails. Well, it doesn't fail when you are in alignment with the structure. It doesn't fail when you understand where is the next higher time frame objective. And I'm not talking about just liquidity. I'm talking about the overall market structure, because that's what everybody sees. That's what everybody's basing their decisions off of. And if you don't understand these simple rules of market structure, that the lower time frame price action is simply delivering to the higher time frame objectives, if you don't understand it, you will always be confused. You will always be asking, why one setup fails and the other one works, why this break of structure worked and the other one didn't. And the reality of trading is that one side needs to be hurt in order for the other side to win. So that's why you see bullish and bearish setups at the same time. There is always a bullish and bearish setup. And which one do you take? Well, you take the one that aligns with the market structure. And if you can keep this core trading framework of market structure in your head all the time, you will always be aligned with the market. And that alignment is your edge. That's the true trading edge that everybody needs. And everybody talks about the bias. How do we know where the price going next? Well, it's all about probabilities. So the question that you need to be asking every single time before the trade, where we are within the market structure. And a lot of traders talk about time before price. And actually, it's price before time. First of all, we need to know the location where we're going to take the trade. And timing comes after knowing where. First, it's alignment with price and market structure. And then you can apply the concept of time. But what is the time? All we're talking about is the volatility sessions with New York, London session. So that's where you want to take the trade. Yes, of course, that's where you want to take the trade. That's where the most volatility is. As traders, that's what we want. We want volatility. But if you are basing your trades just because of what time it is, it's a recipe for disaster, because price will always come before time. And if you don't believe me, go research. Ask ChatGPT to research. how the market actually functions instead of believing in fairy tales. It's truly all about the alignment with market structure and knowing where to take your setups. Not just when, but where. What is the location? What is that high probability zone, which is mainly support and resistance if you think about it. If you strip down trading to its essential core, it's all about support and resistance. All right, so let's get practical here. And I'm going to show you on the real chart what I'm talking about. So here we have a weekly chart of the Nasdaq. And look, first of all, I'm going to flip through the time frames. It's all the same thing. You have the same structure on all time frames. We have higher highs, higher low, higher high, higher low. Price goes higher. So we are in the bullish trend because the only way is up since forever, right? So here on the monthly chart, we can simply just mark out this as break of structure. And over here is also a break of structure. Keep it very simple. This is the move origin, the last move down before price goes higher. So as you notice, we have not retraced all the way down to this move origin. So maybe this is some kind of consolidation in here, and then we will tap into the move origin and go higher. I don't know what's going to happen. This is monthly chart, but we're not here to predict. We are here to anticipate. And when the price gets over here, our job is not to be bearish. Our job to understand that the most probable trade in this scenario is long and not short. That's all it is. That's all we're trying to understand about market structure and price. And like I said, don't try to be perfect with it. Don't try to predict where the price is going because the price is going to do what it's going to do. The further into the future you're trying to predict, the more likely you're going to be wrong. So let's zoom in into the weekly chart and we can see the same thing on the weekly chart in here. We can see this was a sweep over here. So as far as the support and resistance, this over here was a support that got swept. This was the move origin that got swept. So currently this is a protected low on the weekly chart, but also it's a protected low on the daily chart. So let's zoom in even more. And now we are understanding that this is currently a bullish swing point that we are in. And as you notice, inside of this bullish swing point over here, there are smaller structure, there are lower time frame swing points that are trending higher. So this has created a bullish trend, but we want to keep in mind that we just broke out of this bullish swing point. So where is the move origin? The move origin is going to be the last move down. So first of all, this candle over here is going to be the actual move origin. This candle is the last move down, but also we have this one over here as a last move down. You got from this candle high down and then price breaks out higher. So it is in itself also a move origin, but let's keep it at the lowest candle. And this is the objective on the higher time frame. This move origin is the objective. So when the price starts to go down lower, we want to target this move origin and then look for the reversal inside of this move origin. So let's track the small swings. We had the reversal in here. We break in structure higher. I don't know if I should consider this as a swing point, but price goes higher, higher. And over here, we have a candle closure on top. This is signaling a swing point. So currently for this trend, this would be the protected low. We have a break of structure over here, and the move origin is over here. The last move down, which is that last candle, it serves as a move origin. So let's zoom in into this on daily chart, if the price were to go down lower and break this protected low, I would look for the retracement and continuation down lower, targeting this move origin, right? But we gotta be careful. Just because we have this move origin down here doesn't mean that price needs to go down all the way to the move origin. Because as I mentioned, there is a SBS sequence, the swing breakout sequence. So this could be number one, this could be number two, and price could go back up for the number three, creating more consolidation, and eventually it goes back down to test this move origin on the higher time frame for this bigger swing point. So we always want to be focusing on the smaller swing points and what are they doing and what is the next target for that swing point, but also we want to respect the lower time frame market structure breaks and shifts. So right now we are still in the bullish trend on the lower time frames, on this smaller swing points. But when we break the protected low, that would signal a bearish trend. But when we flip the trend up, it would signal a bullish trend. So the price really can do whatever it wants to do within this swing point between the high and the move origin. It could manipulate up, down, sideways, backwards. You can't even imagine the level of manipulation that could happen. And that's why we can't be trading every wiggle in price, because it doesn't work like that. You might get caught up in that manipulation. And the only way to avoid manipulation is to stay out and wait for the high probability setups that usually will come out of the move origin. So let's zoom in into this daily chart. And I like to look at the hourly chart. There is the hourly, the same break of structure here, the same protected low. So based on this swing point, what is the next objective for the price? Well, is to make a higher high. So we know when the price gets into this bullish swing point, sweep something here to the left, we understand that the next objective is to make a higher high. But of course, price is not moving in the straight line. That's why it's so difficult to trade. That's why it doesn't make sense. But it all going to make sense when you align yourself with the market structure. So let's track this internal structure and what's going on. This is the last move down on the daily. We can refine it further into this last move down, because this truly is a last move down. We have this high driving lower and then breaking structure to the upside. So this was a break of structure in here initially. Let's mark it out. We keep following the price. We have a break of structure over here, break of structure over here, and a break of structure over here. All of these higher lows are going to be protected lows, but protected lows for the internal structure. So the last protected low was over here. This in itself, this last move up and break below, is a move origin. So this whole thing we can mark out as a move origin. So this is the bearish move origin. And because price does not just move in the straight line, and we have this internal break of structure, so we have a trend down, retracement, and a new low. This low was lower than this one, so it made a lower low. It turns out to be a sweep though, because now the price has break above this high, creating internal bullish break of structure. So the move origin is all the way down here, this last move down, and we still yet to test this move origin. So this is what I call unmitigated move origin. So especially when the price goes down lower over here, this would be an opportunity to look for the reversal and continuation higher. We can also refine this bearish move origin all the way up into this last one over here. And after this bounce in here, we can expect some kind of retracement at this move origin and then finally to make a new higher high. Because truly price moves in trends and it needs to create trends. So we have break of structure, retracement, break of structure, retracement, break of structure, retracement, break of structure, market structure shift, breaking protected low, change of character. So now price have these internal swings, right, on the way down. So again, structure within structure. So now we are forming a smaller structure within this move down. So when the price reversed over here at the top, you see that last swing point, it started to break structure to the downside. So this was a break of structure in here. Let's put a different color. And it started to break structure to the downside. We have break of structure to the downside, creating this downward trend. Price taps into the move origin, also sweeping this over here. So this is an SBS, 1, 2, 3 is all the way up here. And then what we see is price reversing over here. So we have now a bullish break of structure. We have another break of structure over here. And then what do we see? We see another break of structure over here to the downside. Price makes a lower low over here, sweeps that low, and reverses to go higher. So again, we made a lower low, tapping again into this main move origin. If this is a protected low over here, right? If this is the last move down, our support zone, and our analysis is correct, this support zone should hold. Sometimes we will wick through it. Sometimes the price will manipulate down below and then sweep it up. It happens. Just like it happened over here when we swept this low. We had the bullish structure, but then price sweeps. And where that sweep location is, that sweep location is right inside the bigger swing point move origin, the higher time frame move origin. So when the price comes down and sweeps this low, it's not reason to be bearish. It's the reason to look for the buys because we are inside of the higher time frame move origin. This is the whole logic of market structure alignment. So let's zoom in into this trade over here because I took this trade inside of the Stoic Traders community. I have a live recording and explaining my thought process and everything, how I took this trade. Absolutely textbook trade for a day trader. So let's zoom in and see what was going on here that day and how I was able to take the trade with the same framework of D1 setup, which is the sweep, trigger, entry. So let's zoom in into the 1 minute chart. So I open up the chart, do my top-down analysis, and there is 9:30 a.m. The market open. So I see the market open, drives down, sweeps that low to the left that I was just talking about, right? And then goes up and makes a break of structure. So here we have a break of structure. We also have the creation of the SBS. We have the number 1, number 2, number 3 is the high. The number 4 is over here. It's the liquidation of the number 2. And number 5 is the reversal. So when I see this happening, I don't jump in into trades over here. I don't jump in into trades over here. I simply wait for my setup. Patience is the edge. Price eventually reverses here, right? We have the break of structure to the downside. This is also a trade in itself. It's up to you if you want to trade towards the move origin. The targets are a bit uncertain because it could reverse from the middle of the range and start going higher. In my opinion, the best thing to do is to wait for the move origin. And the move origin for this move up was this last candle, right? The move origin, the last move down. And what do we see happening? So let's track the structure. We had that bearish break of structure here at the top. Price retraces into this move origin, into the bearish one. This was a nice setup. I missed it because I was waiting for the bullish reversal because I am aligned with the higher time frame market structure. So we got this break of structure, the bearish one. Then we have it over here, price going down, making these breaks of structure, keeps going down, making swings lower, lower highs, lower lows, lower highs, lower lows. And eventually over here is what happening is we have a break of structure to the upside. So we have a change of character. We have that reversal, that market structure shift that everybody trades, but a lot of times in the wrong location. And then they stay confused. Well, why this one worked and the other one didn't? What was the reason? This is the reason, is that you trading against the higher time frame structure, against the higher time frame narrative. So where is the last move down? Well, this over here was all the way down like this. So price retraces into that move origin over here. And I bought this candle over here. I buy stopped this bearish candle that tapped into the move origin. Also, this was a sweep of the number two because there is an SBS. We got one, two, three, four, five. My stop loss goes below the move origin, and I simply trail and track the structure, making sure that we are not breaking the protected lows. So we have the break of structure over here. We got the break of structure over here, break of structure over here. And I just keep trailing below these lows. And over here, I have my stop loss below here, and I'm not paying attention to these retracements because I understand that we have this last swing point and we can come back all the way down to the move origin. So I'm not touching my stop loss. And then after this breakout over here, I trail, and eventually my target was over here to make a new higher high. And this was the trade that I took. And you can watch the recording in the Stoic Traders community. I post recordings of my trades there, explaining the narrative, my logic, and everything. But here's the trade that was executed based on the market structure alignment. Even if you missed the trade, there was other opportunities to join the trade. So let's say you missed this initial reversal. We have last move down over here, right? Price goes up, price goes up. We have the last move down over here. That's fine. Price didn't retrace there. But over here, we have this last move down. Price almost retraces over here, almost touches that last move down, but continues higher. The best setup is going to come out at the move origin here. So if you can catch the move origin setup like this, that's the best positioning and the highest RR towards this high. When the price starts moving higher, it might not provide an extra opportunity to join. And this works on every asset in crypto, in futures, in stocks, forex, whatever. If it has a chart, it most likely will follow this type of framework of market structure. So here you have it, a complete trading framework that you can apply right away. You can go ahead and start backtesting. Don't trust me, okay? Don't trust me. I am not your guru. Be your own guru. Go back test this and prove it to yourself that it works. And develop rules around this framework and follow your own rules because that's all you got. You versus you. Look in the mirror. Don't blame anything else. Don't blame your guru. Don't trust your guru. Verify it to yourself. And if you want accountability and the tribe of the like minded traders, consider joining Stoic Traders community at stoicedge.com. That's where we all grow together as Stoic traders, traders who focus on the process and execution, not just getting lucky on one or two wins. We are after long term consistency and progress. So, with that being said, thanks for watching. And no matter what happens in life, in trading, no matter what happens, you always have to remember that the only way is up.